and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets managed to hold on to gains in a range-bound session. The Nifty trades above the 10,450 mark. CLSA sees a visible earnings recovery among Indian equities this year. Its top buy calls include large-cap stocks like L&T and ICICI Bank. The police imposes Section 144 in certain parts of Mumbai and Thane to ensure that the situation doesn't go out of hand after Dalit organizations called for a Maharashtra Bandh today. And get ready for a geopolitical depression in 2018, says political risk consulting firm Eurasia.
Well, thanks a lot for that, Navneet. You're watching Countdown. As Navneet said, I'm Neeraj Shah, and the markets about 0.25% higher. So not a bad day. And keep in mind, I'm saying not a bad day simply because the last couple of days we've had a bit of a pullback from their highs. And in today's session, that quite hasn't happened. Yes, we've off the highs of the day, but still about 0.33% higher. And mind you, the broader markets, the Nifty mid-cap and the Nifty small-cap, or the BSE small-cap, the BSE mid-cap will come up on your screen. But any of the key mid-cap indices will give you a sense of how the broader markets are doing well, and which is why the market breadth is looking good. Yesterday, the market breadth was terrible, close to 1:3 in favor of the declines. In today's session, almost 2.5 to 3:1 in favor of the advances. So it's a bit of a reversal from what was happening in trade yesterday. The heat map, well, a fair bit of green, except for Dr. Reddy's, I believe. Yes, Dr. Reddy's is down to an extent. ONGC is down, and select auto names are just showing a bit of a pullback today. Be it Maruti, be it Bajaj Auto, Tata Motors. So autos have had some autos have a bit of a pullback today, but enough and more stocks negating that, and some heavyweights include an ICICI Bank, Larsen & Toubro, Bharti amongst others, which are doing well, and technology seems to be doing rather well. Remember, I think a few days ago we did this piece about how technology stocks actually tend to perform well when the currency, when the rupee is appreciating, as converse as it is to the fundamental performance, but they tend to do well, and this probably doesn't seem to be any exception as well. But if the large caps are doing well, the mid caps are scripting a really good story as well, and Pradeep is here to tell us about those. Are you starting with the ADAG group yet again, Pradeep?
No, not today, because I have fertilizer names which are doing much better, and they really look strong. Since morning we have been highlighting that fertilizer is one story which is doing well. Nagarjuna, Madras are some of the names. You also have Fact and many more actually, but these are the two key movers that we have picked up. You also have Graphite, HEG, that entire pack moving up once again. So Graphite is one which is doing well with good volumes in today's trade as well. So continues to move up. Rain Industries continues to move up. Now we have picked up these stocks also to make it a point that most of these favorite mid-cap names, the liquid mid-cap names, are doing well today, which means yesterday's correction has probably taken the weak hands out, and we are back in an uptrend as far as mid-cap is concerned. Maybe index is getting stuck at higher levels. You also have some names like Decode. You have Sagar Cement doing well with local institutional support that we keep reporting, and also VST Tillers, which has reported strong sales number for December. There are a few losers though. Insurance has been a hot favorite with traders, so there is a bit of a cool off, I would say. HDFC and also ICICI Lombard is another stock to watch out for. RCom is correcting once again, as we were discussing yesterday. The target achieved, 9,000 crore market cap was met, and from there now there is profit booking. 3i Infotech, after moving up for a while, is correcting today. We have been anticipating, or rather I would say traders have been anticipating some kind of corporate development that hasn't really come, so maybe they're now exiting positions. And Peninsula Land, after a stellar move, is down in today's trade as well.
A lot of stocks, Pradeep, in the broader markets which are doing well, but let's also check what's happening in the futures and options market today. And clearly the markets have been able to sustain the gains since they're trading in the green, but remember, it's off day's high. We did touch the 10,500 mark in today's session, but Nifty's come off those levels, currently about 10,473. Let's just check what the futures are doing. And the premium, remember, in the last 2 days for Nifty futures has been declining. Last when I checked, it was hovering around the mark of that Bank Nifty for you on the screen. There the future premium is almost 67. In fact, Nifty premium last when I checked was almost 20 points. In terms of option strikes, what's happening today? Once again, out of the money call strike, 10,500, 600 have seen open interest addition. And well, the bulls are finding it really difficult to cross the 10,500 mark because the 10,500 call strike still continues to see that open interest addition. On the put side also, we've seen addition for the 10,500 strike. In the near term, what sort of range can one expect for the market is between 10,350 to about 10,550 on the upside. And obviously, the wide range remains between 10,300 to about 10,700. For Bank Nifty, well, majority of the session, we were trading above the 50-day moving average. But once again, it's back towards the same levels. 25,375 is the same level where the 50-day moving average is for Bank Nifty. And we've seen the Bank Nifty futures once again, some bit of OI buildup. Remember, yesterday also we did see open interest buildup of 18 to 19%. But towards the end, there was some profit booking seen. And that's how you saw the Bank Nifty going up. Let's see whether these positions are rolled over for tomorrow or not. Just two stock futures I want to highlight, and both of them are top F&O gainers for the day. One of them is Fortis Healthcare, a counter which for the majority of the time in 2017 was seen consolidating in that range of 130 to 150, has seen significant gains coming. In fact, on the cash side, it's gone up on very, very high volumes. And for the January futures, we're seeing some fresh long build-up for this counter. However, it has come off day's high. It was up almost 8 to 9% at one point of time. The other one is Adani Enterprises, trading at its fresh 52-week high. On the future side, fresh long positions have been seen. And not only that, on the cash side, the counter has gone up today on very, very high volumes.
Well, on that note, let's get your market voice. Ivy Subramaniam, director at Quantum AMC, joins us right now on the show. Ivy, good afternoon, and thank you so much for joining us. What's your sense, Ivy? The obvious answer is that 2018 will not be a repeat of 2017. But at the start, with so many key events lined up, are we in for a volatile time, or will the markets take the announcement in their stride and continue in the positive vein?
See, I don't want to take a call on the market given the variety of variables which operate on that. But if you look at the quantum long-term equity funds performance, and we have been cautious for quite some time. And if you look at the portfolio, the cash element is close to around 18-19%, and that's a reflection of the fact that the huge run-up which we saw in 2017 gave them the opportunity to divest and sell certain stocks because valuations looked expensive, and it has not yet been redeployed in the market, again because of valuations. Now, from an earnings growth perspective, things could be improving compared to where they were last year, but there are certain macro headwinds which I think will come in the way. For instance, it could be the oil prices increasing, the inflation expectation, which is now again seem to be looking up. And the third is all the reforms which we have done, it still needs time to play out. So there could be pressures on the government in terms of fiscal deficit. So certain macro headwinds will definitely impact certain segments of the markets, and you will find the earnings growth to be improving, but definitely a little tepid in that sense. So that's the overall sense I have today of the market, still searching for opportunities which will meet our valuation criteria. IT looks cheap, the pharmaceutical also looks good to us, but many other sectors do look trending towards the expensive side.
Okay, so Ivy, if indeed the belief is of caution to probably wait on 18-19% of cash levels or otherwise in a scenario like this, are you expecting a time correction, or are you expecting a significant price correction as well? Because a lot of people are calling for that to happen and waiting for that healthy correction to come about.
Yes, see, both are possible. It's quite likely that the flows into the market could remain strong, in which case we will need a time correction. So that also is possible. On the other hand, a serious stock price correction could also be a possibility. Now, if you look at the kind of flows both from FIIs and the domestic players, it have been quite strong. But I am still not convinced that the domestic flows are necessarily coming with complete knowledge about the equity markets or the possible volatility in the equity markets. So if by any chance the markets turns out to be a little volatile, my worry is the domestic flow may slow down and there could be a pullback, which means there is a strong possibility of a price correction coming in. But having said that, it's something which we cannot predict. Based on my interactions with distributors, with people who have invested in the mutual funds, I definitely find that their reasons have been more to do with the near-term performance of the market as opposed to building a long-term portfolio. Now, these kind of investors tend to become very nervous when markets become volatile, and they may exit or reduce their investments, which could result in a stock price correction. So it's still a 50-50. It could be a time correction or it could be a stock price correction.
Okay, Ivy, good afternoon. This is Pradeep Pandya. And just taking forward the discussion that you were having with Neeraj, you are known as a bottom-up stock picker who follows fundamentals, sticks to valuation calls and look for value. In this market, are you really able to justify valuations of any of these stocks you are having, and therefore are you tempted to kind of book profit, sit on cash as far as possible?
No, we still think that there is a decent upside in the stocks which we hold, whether it is relating to consumer discretionary, like say a two-wheeler company, or certain banks, which could be a PSU bank and home loan finance companies, as well as in the IT space. In the IT space, definitely we continue to believe that despite all the news about US-related visa issues, companies here are geared up to meet those challenges. And at the end of the day, the cost-benefit ratio of developing certain things in India is still largely in favor of Indian companies. So I don't see a significant slowdown in the large IT companies particularly, and therefore we still find it in terms of valuation very attractive. A, they have a strong balance sheet. B, they have a fairly good delivery or execution capabilities, and therefore they should be able to face these challenges and come out of it in a pretty good shape. So therefore the valuations is something which we like. Similarly, in the pharmaceutical companies, there are certain companies which we think in terms of valuation looks attractive, and we have gone ahead and invested in those. Now there will be volatility in that segment because there is a regulator involved and therefore a little unpredictability would be there. But the valuation sort of justify those kind of risk, or it accounts for those kind of risks, and so we are comfortable holding certain pharmaceutical stocks as well. It's the oil stocks, the energy stocks which moved up very sharply last year, where we had booked profits, and similarly in certain private sector banks which had moved up very aggressively, we had booked profits. But otherwise we are happy to hold whatever else we have right now.
Mr. Subramaniam, good afternoon to you. Which are the sectors where you're waiting for some bit of correction to come by, where you could deploy more funds?
Actually, I'm not waiting for any particular segment to correct. Whichever segment corrects in terms of valuation, we are happy to invest. So it's quite possible that we may just have more names in IT and pharma, and our cash levels could come down in those sectors. On the other hand, if I look at, say, the capital goods companies, given where we are in terms of the capex cycles of private sector companies and the slowdown in that segment, the valuation definitely looks a little rich. So if there is a serious price correction over there, we could go ahead and invest. But that's something which is unpredictable. So therefore, I'm saying that wherever value appears, it could be in the existing segments which we have, or it could be a new segment. If we find value, we will go ahead and invest.
What's your expectations, from the December quarter numbers? Because I think in January that would be the most important determinant when markets are already quoting at these record levels or say upper end of the normal valuation range. Do you think results will be good enough to support the markets and take them up further?
See, the quarterly numbers are something which we don't really focus or try to analyze. I hear to the management comments, but all those comments are used to look at long term. Where do these companies heading, and what kind of challenges they will face, and what kind of strengths they have to face these challenges. So I'm not concerned about what numbers will come up and what kind of temporary movements the markets could do. I am still more looking at 2-year forward numbers, 3-year forward numbers, and what does the act today say about those numbers going forward. So I wouldn't be concerned about what's happening in this sector, in this month.
But anybody who follows fundamental valuation models will definitely be concerned about 1 percentage point appreciation in bond yields, isn't it?
Yeah, that is true. So therefore, that is what I said, that while earnings definitely look from a trajectory point of view slightly improving, there are certain macro headwinds coming up, and that includes oil prices and inflationary worries. And when you have an inflation worry, you will definitely have the bond yields, going up, and that's a macro issue. You can't really do anything. What you need to do is convert that into and see whether the companies which you own, whether the companies which you would like to buy, what are they doing in that situation? Are they able to manage the higher interest cost? Do they have enough margins to pay the higher interest amount which they have to service, or the debt amount which they have to service because of the yields moving up? Those are the things which you have to worry about. And if I look at the portfolio which currently Quantum Long-Term Equity Fund has, most of the companies are sort of debt free, so it doesn't really bother us so much if the yields move up. But yes, if the yields move up and stock prices correct, then that's again a great opportunity to put the money back into the market.
All right, Mr. Subramaniam, thanks a lot for joining us today and giving us your views on the markets. Well, markets are off day's high. Nifty is now at about 10,466, just up about 24 points. And Bank Nifty is also given up majority of its gains that we're seeing today. In fact, it is trading now below its 50-day moving average. Pradeep, you're tracking India Cements on the charts today. What's the development?
Well, I've been tracking for a long time, and today finally I can look at the charts. I'm happy about it. First of all, if you look at the chart, and on the daily chart, we'll just come to it and tell you how it looks. There is a simple flag breakout that we have seen very often. So let's start from here actually. Let's start from this end. So 6 days of consolidation after hitting the recent high, or rather 8 days if you take the very first day as well. And from there we have seen a breakout. This is an interesting breakout which has taken the previous high as well. Most likely it's going to close at a higher level. I'm sorry for this technical glitch. I haven't really caused it. There is some problem. But if you look at it, there is a swing. The previous swing high has been taken. There's a clear flag breakout, and therefore you have a reason to buy it today. But what I think is actually you should be looking at a medium-term perspective, and that's why we have chosen it today. The stock was consolidating for almost a month, and after that, 2 weeks back, it gave a breakout from this consolidation range, horizontal kind of a range that it had formed. After that, we saw a correction back to the upper end of this range, which confirms that we have made a strong bottom here. So when you take a breakout, very often, stock price comes back and retests the previous breakout range, and it happens with head and shoulder. It happens with a trend line sometimes, and very often it happens with head and shoulder and channel breakout. So that support has been taken, and with significantly high volume, today's stock has taken the previous swing. That gives a trader confidence that this is not just a small flag breakout that will last for a day or two. This could probably give you a much better run on the higher side. So that is the other reason why we like it. There are several oscillators and other indicators also supporting it, but I think that will take too long. The case on India Cement is definitely made on the bullish side.
All right, Pradeep. So on the charts, Pradeep is tracking India Cements today, but what about the others?
No, I'm just thinking that it's probably pertinent that we have a cement name out here. I mean, we've seen the reactions that some of the cement companies have got, right? Sanghi, Motilal Oswal note, that stock went up from 125 to 139 today. Sagar Cement, HDFC, MF increased the stake.
In
That
fact, a
stock went up.
mid-cap company like KCP Limited, I was checking, which we usually don't track so much, that too has seen good amount of gains. It's up 3% today, but in the last few trading sessions, the stock has moved from 120 to about 150.
Yeah, but
almost.
Sagar was the interesting
Yeah.
one simply because HDFC Mutual Fund increased the stake. It went up then. There is a note today from Ventura.
Yep.
You could credit both HDFC and Ventura, or maybe just Ventura, but Sagar Cement is up around the 10% today, and therefore cement, the mid-sized regional cement players seem to be in a sweet spot because Sanghi is a regional player, Sagar is one, India Cements also the leader in southern India, and therefore maybe a lot of these stocks have some
The
gains
target
there.
price which Ventura has given almost 1700, and that's obviously 2-year target price, but that's almost 90% upside from these levels.
In a commodity play.
Yes, in a commodity play. That's about the cement space, but let's move on. It's a new year and the world's largest brokerage houses are realigning their strategies. CLSA does not expect 2018 to deliver returns that can match up to the year gone by, but they expect some fundamentals definitely to catch up. Darshan Mehta is joining us with more details on that report. Darshan, what is CLSA betting on in 2018?
Yeah, so 9 buys and 3 sells is something that they are recommending for 2018. Overall on the market, what they're saying is the fact that they believe that meaningful earnings improvement will come in, and fundraising and bank recap to aid recovery that will go ahead. So that's the broad basis that they were talking about. The other views that they have is the fact that the Nifty target by December 2018 will be 11,400. So a 10% upside is something that they believe, but it's going to be much more stock specific rather than the index specific. So some of the stocks that they are talking on, first of all, Crompton Consumer, a potential 14% upside is something that they believe, given the fact that they believe valuations are reasonable, and they believe that the real estate market is moving up significantly. Again, Godrej Properties, RERA implementation, a shift to organized player is something that will give them confidence of a 26% upside that could come in. The next one that they are talking about, the Godrej Properties, these are the reasons what they are talking about. The next stock that they believe could be a potential stock that you have to buy is HDFC. It's the largest player as far as the market is concerned, the mortgage market is concerned, and it trades at 15 times March 2019 EPS. The next stock that they like, this is HDFC, this is the target that they have given. The next stock that they believe could be a potential buy is ICICI Bank, a potential upside of 22%. It's one of the top picks in the banking space, so ICICI is something that they're recommending. The NPI cycle peaking out is one of the key reasons that they like ICICI Bank. The next stock that they believe could be a potential stock that you have to buy is IndusInd Bank with a potential of 26% upside. On IndusInd, they're being one of the fastest growing banks, and at 4.3 times valuations are higher, but it's certainly justified. So IndusInd Bank is something that they like. The next stock that they like is L&T, 21% upside. The entire infrastructure boom is something that will aid L&T going ahead. So they are rather positive on L&T, given the fact that real estate recovery will also help them in their business. The next stock that they are bullish on is Lupin with a 17% upside in terms of some of the faster resolution expectation as far as their plants are concerned. So they are indicating that that could lead to a re-rating. The other stock that they like is M&M Rural Recovery, 20% upside is something that they believe. Tractor volume traction is definitely there, so they are bullish on, and one of the cheapest plays in the consumption theme is M&M. They also like NTPC with a potential 16% upside. They are rather bullish on NTPC, given the fact that the project commercialization will drive earning growth for the company, and valuations are attractive. Now, 3 stocks which they don't like: Shriram Transport, a potential 31% downside, given the fact that rising yields is something that is a negative for the counter. The next stock that they don't like is Colgate, 7% downside, valuation concerns certainly there. And the last one, which is pretty much at the same price, is HPCL, trading at almost the same levels, unfavorable risk reward ratio at a 39-time multiple. So this is something that they have said. So 9 buys and 3 sells by CLSA for 2018.
Okay, Darshan, thanks a lot for bringing all those details. Those were the top picks of CLSA, and they expect Nifty target by December 2018 to be only 11,500. So that's telling you they are expecting Nifty to go up by only about 900 to 950 points in this new year. But let's talk about the other sector. Pradeep highlighted the fertilizer stocks are doing pretty well, and one of them is Coromandel International, which is in the spotlight today. The stock has snapped a 2-day losing streak after gaining for 7 straight days. Before that, in fact, Neeraj, you do have some details on that which Bloomberg Terminal is throwing about.
Yeah, so the terminal is throwing out the trading pattern, but I mean, the reason is obvious, right? Almost everybody is now talking about how the DBT might be the principal reason why all these companies might be in focus. There's also talk, I was speaking to Yash before I came in, and there's talk of the subsidy that exists before the full rollout of DBT to be paid out. I don't know how that happens, but that's something you have to keep at the back of your mind, and that could be an additional leg up to these stocks. I think the article by Neelkant Mishra on fertilizers and how they would do well is fairly interesting. But that's got this entire pack in focus today, and this is just one example of a stock that is doing well. Maybe not as well on the volumes front today, but here's the deal. The entire pack is active. Coromandel, a lot of buys, very few sells, and at a substantial premium is still attracting a lot of buyers. If you look at the space, the fertilizer space, Coromandel trades at a substantial premium to almost all of its peers. Yet, the quality of the management, the reach that they have, and the fact that there are very few players in the private space in the fertilizer pack that you can bet on confidently probably leads to this stock attracting the kind of attention that it does attract. It's not cheap, not terribly expensive either, 21 times 1 year forward. You could argue that it's cut both ways. If indeed the earnings growth starts coming in and the moat around the business stays with the point of sales that almost all fertilizer companies are doing, this one could well be worth it. The interesting bit is today, the volumes are actually a bit lower than what the 10-day or the 20-day average is. But the only thing is that the 20-day average itself has exponentially moved up in the last few days, and which just shows the kind of interest that almost all of these fertilizer names are getting over the last few days. In today's session, all of them are up, but it's predominantly Coromandel from amongst the large cap names or the private names, which is attracting attention. So do watch out for the fertilizer pack. It's looking like it's probably turning around the corner and for the better.
Well, and the gains are, if you look at fact, that's fertilizer and chemical, Travancore, that's up almost 10%. Madras Fertilizer, Madras Chemical, Madras Fertilizer is also up. I think it's locked in upper circuit, and RCF has been pretty active alongside National Fertilizer in today's session. So a lot of pockets actually which are doing well today. So once again, it's turning out to be a session where individual stocks are performing well. 10,444. Nifty has given up all its gains, and Bank Nifty is now in the red. Well, we'll speak more about the markets, but before that, let me talk about Power Mech Projects. That's a company which is in focus today. The stock's actually been locked in upper circuit and has seen gains of over 100% in the last 1 year. The circuit limit has been open now. It's up only 14.5%, but at one point of time, it was up almost 20%. Let's ask the management then. Joining us on the phone line is the chairman and managing director of the company, Mr. Kishore Babu. Mr. Babu, thanks a lot for joining us today on Bloomberg Quint, and wishing you a very, very happy new year.
Thank you. Very same to you.
Well, it's looking like a good start. The stock price of your company is doing pretty well today. Is there any specific development which has taken place?
Yeah, because now we are bidding into the oil and gas and as well as some road projects and also the railway projects. And the response what we are getting from these sectors, which are apart from the power, the railway and as well as roads and the oil and gas, the petty response is very good, and then we are going to get some more orders in these 3 sectors, which is not so far, we are not into that.
Tell us what's the quantum of the order that you're expecting, and especially from railways?
Yeah, these railways and roads altogether, we are expecting another 2,000 crores orders in the next couple of months. Maybe in the end of the February, we are going to close around 2,000 crores.
Close to 2,000 crore. And what's the timeline? By when do we see these orders flowing into your profit and loss account?
That will come in the next 2 financial years.
Next 2 financial years?
Yeah.
Okay, and could you talk to us a bit about the international business? How is that panning out?
Yeah, international business. Right now we are working on 4 projects and also another 2 orders we are going to get the next, maybe in the next 15, 20 days. And one is in Kuwait and another one is in, again, Saudi Arabia. And these 2 orders we are going to get it. And also we are getting good response in the international O&M. And we are going to have a tie-up with some 2 companies for getting the more and more O&M jobs, what we are doing presently in the domestic market. And same thing we are going to expand our arm in the O&M segment in the power market in mainly the Middle East and the African.
Mr. Babu, good afternoon. What's the current order book like? What's the number there?
Right now we have an order book of around 4,000 crores.
4,000 crores.
And we are expecting another 2,000 maybe by end of March.
Okay, so the
so that what will happen by April 18 and the orders to be executed in hand, the sound order will be around 5,000 crores.
Sorry, no. Can you repeat that for us? You believe an order book currently is 4,000 crores?
Today we have the order book of 4,000 crores.
Yes.
And then we will consume another 600, 700 by in this fourth quarter. Then what will happen? The remaining order book will in hand. It will be the 5,000 crores in the 1st April 2018.
Okay. 5,000 crores of order book as of 1st April 2018, including the order inflow of 2,000 odd crores that you expect. Now,
then the combination will be earlier. If you see our previous balance sheet, the 60-70% from the power and the 40% is the O&M and the international.
Sure.
Slightly the shift will be taking place. The power will be reducing, and then we are going to gear up in the roads and railways and the international.
This is a conscious strategy that you're following, right?
Exactly, yeah.
Okay. I just have one question though, and I'm sure maybe Pradeep has a couple more. But I have one question. I heard you mention that in Q4 you could consume about 600, 700 crores of orders. Now, I was looking at your investor presentation. In the first half, your revenues are about 700 crores. Are you saying that in the Q4 you will do what you did in the whole of first half of FY18?
Yeah, normally our type of business in service in the Q3 and Q4 will be more. And Q3 and Q2 together, it will be around, we will with around 700 to 800, and then finally we will close around 450 something, 1,450 or something.
Wow. No, sorry. So if you've already done 700 crores, sir, what do you expect to end the year with in terms of revenue?
This year we will end with around 1,400 plus.
1,400 crores?
Yeah.
No, again.
1,400 plus, maybe 1,450 or 1,440 or something like that.
Okay, so you will. Okay, sorry, I'm missing the math, Mr. Babu. I'm extending this question. You've done 700 crores already. If you do 700 crores in Q4, that adds up to 1,400 crores any which ways.
Already the Q3 I had done almost 1,000 crores.
Okay, and you will do another 500 crores in Q4.
Yeah. 450 to 500 crores I will do in Q4.
Okay, fair point. Pradeep?
Okay, but also now what we see, in recent quarters, your margin has been coming off. Is it because of the change in the order pattern or something?
Yes, naturally, there will be a shift. Initially, what will happen that we are shifting to the more in civil and more into these railways and all. Slightly, there will be the decimal. There will be a change in the profit, but that will be covered up in our international business.
What's the update on your JV which you recently announced with Skipper Limited?
Skipper, we have an order already which you have shown, which is in Nigeria, that is there. And now we have started one joint venture in Dubai. This is the offset of Nigerian company, but in the future we wanted to do the business from Dubai, not from the Nigeria.
Do you need to raise any money, Mr. Babu, in the near term?
Right now we don't have any.
No fundraising plans.
Yeah, no fundraising.
Okay.
Just one last question from my side. What sort of margins do you garner from your domestic and your overseas business? If you could give us a breakup on that.
Yeah, the international will be around 18-19%, and domestic will be around 13 to 15%. In EBITDA, I'm talking about the EBITDA levels.
All right, Mr. Babu, thanks a lot for joining us today and taking us through what's happening with the company Power Mech, that is, which is trading with good amount of gains. The volumes have been on the higher side. At one point of time, it was locked in upper circuit, but the circuit has been open now. It's seen gains of almost 12 to 13%. Well, we were talking about the markets too, and they've turned red, and the template once again remains the same, that in the last hour of trade, you see that selling coming about, and 10,437 is where Nifty is. So given up almost 50-60 points from the top, and Bank Nifty is now approaching very closer to the mark of 25,300. Good time to get in our technical experts on board then. Hemen Kapadia of KRChoksey Securities and Hadrien Mendonca of IIFL are joining us on the show now. Good afternoon to both of you, and thanks a lot for joining us today on Bloomberg Quinn. Hemen, let me come to you first. What's the stance now? The volatility is once again on the higher side. Would you take any sort of call in the index?
Very good afternoon to you, Navneet. I think the overall view remains same, Navneet. We are corrective and we remain in the range. Earlier the range was between 10 and 10.5, now it's 10 and 10.550. So, either one can sell a strangle, Navneet, it would be around 10,600 and 10,200. I don't think either seems to be taken out in a hurry. And if you just want to go plain one side, I think last time I said sell the 10,300 put, I'd say sell the 10,200 put option. I think that should remain safe enough, but selling the strangle would be safer, Navneet, because I think the way the open interest position is, and like you said, the VIX is on the rise, I think it would make sense to sell the strangle.
Okay, selling strangle is a good idea where you sell a put as well as a call. So 10,600 and 10,200 are the levels where you can sell a call and a put, and that would be a short strangle strategy that is being advised right now. Hadrien, do you want to trade in index at all, because it's not really going anywhere?
Yeah, it's not really going anywhere actually, and if you see that 100-point range continues to remain. In fact, within the range, Nifty is actually settling in this lower top, lower bottom short-term structure, which is actually not good for the overall short-term structure of the Nifty. If you do a constituent analysis, then all the three OMCs are looking weak. Reliance is unable to hold on to its gains. It's getting weaker. HDFC Bank, which made an attempt of breakout yesterday, has failed. And in fact, there are chances that it may be a false breakout. So, all these, even the constituents, even SBI is looking weak. In fact, PSU banks are the biggest culprit. If you see the way Bank Nifty is behaving, it is not participating in whatsoever rally that we've seen in the Nifty. So overall weakness continues to remain. The range, that is the lower end, is 10,400. That is also a very strong support for Nifty. And I think if we breach that support, we are in for a next round of sell-off that we could see in the coming days. But let's hope and see that the 10,400, 10,390 support is not broken. Otherwise, I'm actually a little cautious. Instead of playing on the index, I guess I'd rather stick to the mid and small caps. They continue to outperform. So I'd rather be a little more stock specific rather than index.
Trying the heavyweights which are pulling the index down include a Maruti Suzuki, I think about 1.5% down. Infosys is down about 1%. ONGC not strictly the largest of weights, but still down about 1.6%. I think, yeah, in HDFC Bank, naturally so. But Infosys, Maruti, Tata Motors, that's what I said. These are the stocks which are actually putting pressure on the index. And Maruti was anyways in the red. I think Infosys moving back into the red. HDFC Bank are all doing that bit in the last 15-20 odd minutes of trade. Stock ideas then. Hemen, to you first. A couple of ideas from your end currently.
I think if you're looking in the cash market, Neeraj, I think ILFS Transport has given a breakout of sorts today. So that looks pretty interesting. And if you have a positional trade, I think PVR is one stock which looks like a positional trade from probably a 2 or 3 week point of view, Neeraj.
PVR, okay. And okay, Hadrien, what about you? Your strategies?
Yeah, I'd rather stick with Coal India. That's showing a little bit of stability if you compare it with any other stock, and lack of volatility also will actually help to stay the trader into the current trade. So I'd like to buy Coal India, play for a target of close to 280 and keep a stop loss at 268. The main reason on Coal India is that it has actually broken out from this declining trend line pattern. along with good volumes to back up the current move. So I think one can consider accumulating Coal India at these levels. Second is I'd actually sell a Glenmark January futures. If you see Aurobindo Pharma, Glenmark and others, pharma stocks are actually showing weakness. And multiple doji patterns are visible. These are early signs that Glenmark is turning around from the sharp rally that we saw in the past 2-3 weeks. I think ideally a good time to go short sell on Glenmark for a target of 575 and keep a stop loss at 600.
Okay, so these are some of the stocks that our experts are recommending today. Hemen, if you were to pick up one fertilizer name in this market, and we have been discussing about it, all the fertilizer stocks are moving up with good volumes, hoping for some policy developments. Is there one stock that you like?
I think even fact looks interesting, Pradeep. It has moved a bit. I have a feeling that we are going to move some more. So probably another 10% upside on fact seems to be on the cards, Pradeep. So that looks interesting on the charts.
Bring up the mid cap and the small cap end of the market. I don't think the damage is too pronounced there. And frankly, there is not enough damage to talk about. I was just trying to see if there has been a palpable move back. Look at that small cap index. Hardly any move there. It's still up about 1%. It's not really fallen too much, and it's evident in the way some of the mid cap names or the Nifty 500 names are moving around. Rain Industries is still comfortably perched about 9% higher. JSPL still about 7.5. Adani Enterprises still about 7.5. So no noticeable pullbacks there. And Pradeep was talking about fertilizers. I was talking about fertilizers. Those stocks continue to rise and shine. RCF and the others are still up and about in the session today. Hadrien, for somebody who's looking at stocks that have moved around the last 3 or 4 sessions, I think one name that comes to the fore again is Rain Industries. That, HEG, Graphite are some of the names that are continuing to do well for the last 3 or 4 sessions. Rain is already up 9.5 again today. But what do the charts suggest? So what are the levels that one could watch out for?
Yeah, see, Rain Industries, after a good healthy consolidation of nearly 6 to 7 weeks, this week has shown very, very sharp up move. So, and if you see the previous trend of Rain Industries, it is in a solid higher top, higher bottom structure. So, considering its primary trend is up and post the consolidation, the breakout has happened in this week, and I think anybody, in fact, who would want to enter Rain Industries, ideally these are good levels because the breakout has just happened. And according to the fresh projections, I think Rain Industries is all set to move higher towards the 475 or even the 490 levels if you have, a perspective of 3 to 4 weeks, that is close to a month. So, a fresh buyer also can try and enter in Rain Industries at these levels because the pattern and the consolidation has been so convincing, and it has held very beautifully above its 21-day moving average. I think it's a good time where you can once again re-enter.
Okay, that's the call on Rain Industries. The counter continues to rise and shine. It's up another 9% in today's session. But let's move on. There are around 200 stocks that are tracked by at least 4 but less than 10 analysts on the Bloomberg terminal, and some of them have the potential of being hidden gems in 2018, while if the analyst target price is anything to go by. Jayesh Kilani has drawn up a list of such stocks based on yesterday's closing price, and he's here to talk about the one with the highest potential gain. Jayesh, which is that stock?
So, Navneet, we are looking at Newland Laboratories as the stock to watch out for. That is because, the analysts on the Bloomberg terminal, they have a target price which gives it a return potential of nearly 50% on the stock. So, Newland Laboratories, the pharmaceutical company which specializes in bulk drugs and intermediates. That's what the company does. Now, if you look at the market data that I was referring to, now that price on as of yesterday, that's close to 876.4. But currently, if you look at it, last time I checked, it was just trading about 5-6 rupees lower from where it closed yesterday. But the Bloomberg consensus target price, which is at 1312.5 per share. That gives an approximate return potential of about 50% for the stock, which is the highest in this space that you were mentioning, the 4 to 10 analyst or the 9 analyst range that we are speaking about. And also mind you that this is a sub 1,000 crore market cap company. As far as the individual analysts are concerned, there are 5 of them who track this stock. 60% of them have a buy rating, 1 has hold and 1 has a sell rating. And the target price ranges from about 945 to 1800. The lowest target price is also higher from the current price. You have to bear in mind that one. If you look at the financials of the company, so H1 of 2018 has not been that great. So revenue wise, they've just done half of, little less than half actually of what they did in entire of FY17. And operationally, they have, actually not been able to do much better in terms of the H1 FY18 has been just 25 crores on the EBITDA level as compared to about 88 crores last year. And there is significant margin contraction that you can see. And the profit number also, nothing impressing over there. Just about 5 crores done for the entire first half of the year as compared to about 33 crores. So, what are some of the reasons that we are picking up why analysts might be enthused or why they have a 1312 target? That's because Daulat Capital, which is, they have a 1800 rupee price target on the stock. They say that the API and the CMS business is likely to do well going forward. And along with that, the earnings profile is likely to improve with their merger with the Newland Pharma Research. So that will add to their portfolio. The other brokerage that we are tracking is Anand Rathi. They have a hold rating on the stock, and they say that though the the second half is likely to be subdued in terms of earnings, but the recent acquisition that they've done, that will add or that will take away the capacity constraints that the company is currently facing, and they expect that the recovery will happen in second half of FY19. The last brokerage that we have is Systematics, which has a sell rating. Why do they have that? Is because of the weak order flows that they've seen for the key drugs that they manufacture, and they say that improving business environment will support the business outlook going forward.
Thanks for that, Jayesh. That's Newland Laboratories. This counter had touched the mark of 1700 last year, but it's come off from thereabouts. And it is a pure play, API play. One has to see that in the pharma sector. The earnings in the last 2 quarters have not been that great. And precisely that's the reason that you have seen that correction for Newland Laboratories. But overall, yep.
No, so that notwithstanding, I just wanted to mark one more stock, Navneet. I just suddenly saw ILFS move up even further than what it was.
Transport.
Look at that stock. It's up 11% now. Remember the Zozila tunnel. The cabinet has cleared the 5,000 crore tunnel / road project, and I think ILFS Transport is the one that has been cleared, and that's why the stock is up about 11.5% now. 3 million shares traded, and that's not a small number. I mean, I know these transport projects or these road construction projects are spread out over a period of maybe 2, 3, 4 years, and I think Zozila is arguably a difficult project. Unless I'm very wrong, this is northern India, in the state of J&K or otherwise. We'll get some details here, but if my memory serves me right, this was a project that was long pending to be given out to one potential bidder. That it is a large 5,000 crore project only adds to the revenue visibility in the execution, confidence in the execution abilities of ILFS Transport, and which is why this large move, 12.5 or 13% higher, 3.5 million shares traded. And if you look at the AVAT function on ILFS Transport, you will see that these volumes are substantially higher than the 10-day or the 20-day average that ILFS Transport typically clocks in. Just look at that surge in volumes. That blue line is the typical line. This is just a sharp, remarkable uptick in the volumes for ILFS Transport, and not surprised there. It's a large project and it's really moving the stock. All right.
And if you want to see the picture that is just opposite of this, you should look at Bajaj Hindustan. This stock has corrected some 8-9% from day's high after moving up yesterday, and then today on the news of S4A getting cleared. And look at it, the stock is down to where probably it was 2 days back.
Well, this is looking good for some stocks and not looking good for some stocks. But if Bank of America Merrill Lynch is to be believed, and if Goldman Sachs is to be believed, a clutch of the metal names could actually do well. So what's the rationale that these brokerages have? Nikki Mirchandani standing by with the key takeaways from those reports. And Nikki, what do they have to say?
So we have a couple of brokerage, as you rightly mentioned. The first one that we have on our list is JSW Steel. Goldman Sachs has initiated a buy rating on this counter with a potential upside of nearly 19%. It says that the company is a preferred play as it's a low-cost converter, and it has also got with no raw material integration. That's definitely a positive thing for the company. And it says that the robust margins that the company is currently enjoying, free cash generation, and the ROE, which is at par or maybe at a little better than most of the global peers, is what has made the brokerage bullish about this counter. It has also initiated a coverage on Tata Steel with a neutral rating and a potential upside of nearly 7% for Tata Steel. It says that the company is expected to benefit from stable global prices. However, it does mention that the stable margins are largely priced into the stock, but the valuation of 7 times its FY20 EV to EBITDA estimate looks to be fair to the brokerage. Surprisingly, we also have JP Morgan on metal sectors. It says that it would prefer the integrated steel players, that is SAIL, Tata Steel, as compared to the others, and they are actually direct beneficiaries of the price hike that has come through. NMDC has increased the iron ore prices steeply yesterday, and with this they are expecting the steel players also hiking the prices of their steel products for that matter. And you have Bank of America Merrill Lynch, which has initiated a buy rating both on Hindalco as well as Hindustan Zinc. For Hindalco, it says a potential upside of nearly 24% with a target price of $340 per share. It says that the company is uniquely positioned, be it in terms of their cost advantage or the technical expertise, and it says that the upstream cost positioning right now has improved significantly, while the downstream already sees a good margin. Next in the list, we have Bank of America Merrill Lynch on Hindustan Zinc. There is a potential upside of 12% that the brokerage sees with this counter with a target price of $345 per share. There also the brokerage mentions about the global cost advantage and the price power positive outlook. That's the key out here because of the underlying metal. It says that zinc is the strongest fundamental among the base metal complex that the company could have, because of which the bullishness comes. It does say that the valuation are rich at this kind of point of time, but then they are largely justified by the favorable pricing outlook that we are seeing for zinc at this point of time.
Thanks for that, Nikki. And that's a bullish view coming from your foreign brokerages from the likes of BofA and also Goldman Sachs. And also remember, the steel prices have been firming up. The capacities in China, because of environmental reasons, they've been shutting down, because of which you saw the export of steel from China in 2017 coming down, which has actually benefited countries like India. In fact, Goldman Sachs highlighted that Indian steel sector is in midst of its multi-year upcycle. Just want to talk about one more stock, and that's your top gainer in the Nifty Metals Index today, and that's Jindal Steel and Power. In fact, you had IDFC, which came out with a report stating that JSPL, now you could see a turnaround for this company. Remember, it's been posting losses for the last 4 years. Let's see if the new plant commissioning or the added capacity which the company has seen can change the fortunes or not. But let's just take a technical view, because it's after a lot of days that you're seeing a move of 8% on a stock like JSPL. Hemen, on the charts, is it showing any sort of fresh breakout? Can one look to take any fresh long positions on Jindal Steel and Power?
Well, it's overcome its 2015 high of just plus 200. Navneet, I'm not sure that quantifies as a fresh breakout, but it's already done. So we're already in a third gear. There is a lot more headroom left. I'd say 50% return from here in the 12 to 15 months. So it looks like a clear buy. But after this, I think it's moved from 158 to 220 right now, Navneet, in a matter of 4-5 weeks. It still doesn't look like reversing, but I'd wait for some sort of a correction and decline to come in before going long. But yeah, if you have a position, hold on. If you don't, wait for a decline. Like I said, 50% return from here in the next 12 to 15 months seems like a cinch.
Okay, that's the view on JSPL. Just pull up the intraday chart of Oracle Financial, that's OFSS. That's now it was up almost 4% in trade. Yeah, as you can see, the gains have actually come in the last 5 to 10 minutes of trade, and I guess it's also in the futures and options space. Hadrien, anything on Oracle Financial at these levels that one can initiate a position?
Yeah, I'm doing a quick chart check. From past 2 weeks, the stock is actually unable to surpass its highs of 4150, 4160. In fact, there are also chances that we may see this double top kind of a formation happening on the daily charts. So I think OFSS will continue to consolidate before we see any kind of an up move coming in. Its immediate support is coming close to 3950 levels. That is exactly a 21-day moving average. And why this is going to act as a strong support? Because since the past 3 months, it is not broken the 21 days. So we can see fresh downside only if the supports which I mentioned will be broken. Otherwise, those are good levels where one can accumulate and again play for a target of 4100 plus.
That's the call on Oracle Financials. Recall is yet another interesting stock that you can look at, which is finding some buyers at these levels. Man Industries is another stock which is finding some support, and Sagar Cement continues to move up. So there is traction in several mid caps. We'll talk about it. But Yash Upadhyay joins us with the Fab 4 stocks of the day. So first of all, let's look at these Fab 4 stocks.
Thanks for that, Pradeep. So we kick things off with Sagar Cements, and the stock has gained as much as 14% today, its highest intraday move since November of 2016, after Ventura Securities reinitiated coverage on the stock with a buy rating and a target price of 1,715, which indicates a potential upside of 89% over the next 24 months. Now, they expect the company's revenues to see a healthy growth going forward, while also expecting their volumes to grow at a compounded annual growth rate of 19% over FY20. Rathi Drugs is another name that we're looking at, and the stock has surged as much as 12% today after the company announced that it would be considering the proposal of a share buyback at its board meeting on January 8th. Gallant Ispat has had a fabulous start to 2018, and the stock is locked in a 10% upper circuit for a third consecutive trading session after market regulator SEBI revoked its order classifying it as a shell company. And lastly, we are seeing good moves coming in from MEP Infra as well, after nearly 23 lakh shares, or about 1.4% of the overall equity, exchanged hands via multiple block deals. We don't really know who the buyers and sellers are, but that would be information that I would be looking out for once the bulk deal data gets updated.
Okay, we will definitely watch out for that. It's very interesting, this Rathi group of companies. There are two names out there, Rathi Drugs and Rathi Chemicals and Rathi Industries. And Rathi Industries, remember, recently signed those multi-year contracts, multi-thousand rupee contracts, and that stock has been on a roll. If you look at the last 15-day or 1 month chart of Rathi Industries, you will see, I think it's moved up from around 1,000 odd rupees, if I'm not wrong, to 1,200. This last 1 month, it's been a 26% rally for Rathi Industries, and that's not small, really. Let's not scoff at 26%. I mean, don't think of RCom, but otherwise 26% is a fairly decent move for a stock. So this one has done well, and now Rathi Drugs is starting to participate. It's about 10% higher right now. Should be interesting to see what it does now. Coming out here, Hemen, both the Rathi twins, have you ever had a look at them?
Both the Rathi twins. Industries 1160. I think we are sort of preparing to launch assault on 1160. It seems like a distinct possibility looking at the way it has moved, and that we are in a long uptrend. So very clearly we are looking at another 10% upside from here. And coming to the twin Rathi Drugs, this looks very interesting despite this sharp run up, and we've seen it move from 510 to 710. That's what, 50% in 3-4 weeks. This looks, if one takes a slightly longer term view, Neeraj, Rathi Drugs is heading towards 880 and 4 figures over the next 15 months. So this looks very nice, especially if and when there's a decline. Not fair to compare stocks, but if you were to give me a pecking order, I think Rathi Drugs first and then Rathi Industries.
Okay, we'll watch out for both of these names. Let's look at quick check on the global markets before we move back to our fundamental guest for the day. And the global markets should come up on your screen on a flat day for the Indian bourses. Europe is doing rather okay for itself, 0.5% higher, though nothing too much. Remember, the European PMI data, I think that came out yesterday, was fairly strong. I don't know if that's a bit of a leg up that European indices are taking from there. And therefore, the CAC and the DAX in particular, should be strong. But let's wait and watch if these rates stay put. And a bit later on in the show, of course, we'll get a sense of how the European markets by and large are faring and what's the outlook when we speak to the Bloomberg reporter from London. But for now, let's talk about our markets. Siddharth Sedani, Vice President of Equity Advisory at Anand, Rathi, is joining us on the show. Siddharth, thanks so much for joining in. Have you guys in the recent past covered HEG, Graphite India, Rain Industries, or any of these global commodity linked names at all? Because they seem to be restarting a run of sorts over the last 2 or 3 sessions, and they are stocks that have already had a fabulous run in all of 2017.
Thank you, Neeraj, for having me on the show. I'll just recap the thoughts which I have communicated through your channel also before. Graphite happened to be a multi-bagger for us. We had a coverage from 180-200 levels, and we still have a hold rating on graphite, and we believe the re-rating of the electrode prices and the renewal of the contracts which they have done, that will again shoot up the prices of electrodes going forward in 2018 also. So we have a hold rating on graphite. In fact, from the same segment, we also like Phillips Carbon, which is also near to our target. We believe Phillips Carbon Black also is one of the cyclical play which has a strong potential to play out. So in terms of cyclicals are concerned, we have really meant a good performance for our investors in graphite and Phillips Carbon, and both these companies seems to be very positive going forward in 2018.
Okay, Siddharth, in our previous conversation with management of either HEG or Graphite, they don't disclose their contract details. Now, we do understand that the spot prices have been going up, but these contracts, they were placed earlier. So does it mean that the coming 6 months or the next 3 to 4 quarters will be even more profitable for companies like this because they will be factoring in the spot price now?
Yes, of course, that's what the case with graphite and HEG both. Further renewal of contracts and matching up with the spot market prices will be done, and that is why we believe the margins will be increasing further 200 to 300 basis point for these companies. And because of increase in margins, better revenues, better shape of the entire metal industry in India, as well as some kind of a protection which government is trying to give to the metal industry in India, I think this all thing is boiling in for these ancillary plays like graphite, and definitely there would be a northward jump in terms of contract prices from here on also.
Okay, so that's why you are bullish on this stock. We also look at some of the names that we have been discussing. Power Mech Project is one, and we did speak to the management. They've guided for around 14 to 1500 crore rupees of revenue for the current year, which is in line with most of the analyst expectations. Do you track this stock as well? Any call? Siddharth?
No, we don't track Power Mech. We don't track this company, and we don't have a coverage on this.
Okay, Hemen, do you have any call on Power Mech based on the chart patterns?
Pradeep, it's a relatively new listing, so not too much of data to go on. Whatever data we have seems to suggest that we are in a short, medium, long-term uptrend. We are in uptrend in all time frames. We gave a breakout from a 8-week consolidation today itself, and the stock has moved 13%, 15%. So I'm not sure if I have a fresh buy call, but after it moves so sharply. But if you have a position hold, this probably looks like going towards 970 in the next 10 trading sessions or so.
I think in last 1 year, Neeraj, the stock has almost doubled. I think 400 odd levels were the low that I remember having seen at this counter.
Wow.
Yep.
Yeah, you can see that.
97%.
Bang on. That's not bad. That's not really bad. And now he's getting into probably the more lucrative areas, right? ENC per se would probably be a higher margin place. Or did he refer to lower margins in the intermediate term? Because I think Pradeep asked him a question about margins, and he said that there could be lesser margins in the intermediate term, but eventually could move to higher orders as well.
Yeah,
Wait and
they've
watch.
given good guidance in terms of order book, but let's see if that fructifies or not. I just want to pull up the intraday chart of Jet Airways. If you could just pull up that. It's touched its fresh 52-week high once again. 871 was the high. It's almost there actually, 872 now, and the gains have come in the last 5 to 10 minutes of trade. Siddharth, what's the view on the aviation space? If you were to bet on any of these listed players, which one would that be? And also tell us at current levels, would you place a bet on Jet?
Well, we are little neutral on Jet Airways as of now in the aviation space. But if I talk about the entire space, the kind of passenger traffic we've been seeing since 15 to 20 months now, and ATF, I don't think there would be much of a shocker for these players now. Overall, what we believe is SpiceJet in the entire pack looks most interesting. But not at the current price. I would still suggest the viewers that if buy on dips would be a better strategy on SpiceJet. The entire space looks good for another 6 to 12 months. But I think at these prices would be a little steep in terms of valuations. Buy on dips would be a better strategy.
Siddharth, do you like any fertilizer stock? In today's trade, we could find several stocks moving up by 10% or above. Anything that you like fundamentally?
Well, not in precisely with the fertilizer pack. What we like is agrochemical, and we believe that this budget would be having more thrust towards the rural theme. And on the back of that, we believe that agrochemical can be one of the play which can be really played out for 2018. One of the play is UPL, which is again a large size company where the margin seems to be improving. Overall revenue jump we can expect around 17% on a CAGR basis for next 2 years. So UPL in the agri space looks most interesting. Of course, fertilizer policy is there maybe on the way, and that is why all these stocks are buzzing. But we still believe agrochemical and some niche chemical play would be the theme for 2018.
Philips Carbon, by the way, has gained another 5% in last 5 minutes.
Who recommended?
Siddharth.
Siddharth. Okay. Well, Siddharth, people are listening to you, is all I can say. Philips Carbon Black, 14% higher though. That's a sharp move. So we have the fundamental view from Siddharth. Let's try and see if there is a trade still possible here. Hadrien, any thoughts? Philips Carbon Black?
Yeah, the stock actually yesterday broke out, and the move since then is like significant, and it is just on fire actually, if I can say. I think right now should not be a right time to enter because the projected target has already been achieved. So I think the best strategy in Philips Carbon should be wait for a small correction, close to the 1020, 1030 levels before you actually try and get your hands on Philips Carbon again. So buy on decline should be the best strategy because of the large move that we've seen in the past 2 days.
Okay. Buy on declines. If you are indeed trading, Siddharth Sedani of Anand Rathi, who recommended this, believes, or at least believed until 5% ago that it was a good stock to get into. I'm sure he probably still believes that. That's interesting. Okay. Yeah, at some point of time, I just want to pull up a chart of all the 3 aviation stocks in the last 3 months, and you will see how by a huge margin has Jet Airways outperformed SpiceJet and Indigo, because I think SpiceJet has been stuck at that 140, 150 level now for a long time. The last 3 months, Jet Airways is up 85%. Now couple that with, or rather, let's see what SpiceJet has done 3 months, 10%. I think Interglobe would probably be around these levels as well. So there's been a valuation catch-up of sorts that Jet Airways has done with the others, but it's just overshot that game by a margin really. Look at this. 3 months, the other two have largely remained flat. 10% over 3 months is flattish, to be honest. And Jet Airways is just in some other skies, quite frankly. 85% in 3 months is a very, very strong move. Does it feature in the list of stocks, Navneet, on the FNO site today? And if not, what are the stocks that will or could come into the ban or could get out of the FNO ban?
Well, Markets are pretty lackluster, Neeraj. There's only one stock which can enter into the F&O ban, and that's for tomorrow's trading session. It's also one of your top gainer when it comes to the F&O securities. So Fortis Healthcare is the one where if you look at the overall open interest as of yesterday, as a percentage of market-wide position limit was almost 89%. And for a stock to enter into the ban, it has to breach the 95% mark. If you look at the futures and even a couple of the option strikes, they have seen open interest addition, and also underlying today has been quite active, Neeraj. In fact, on the cash side, do watch out for the delivery data because it's gone up on very, very high volumes. And also this stock has broken out from the range it used to probably trade in 130 to about 150.
Let's wait and watch Fortis Healthcare. Yeah, and it's had a good run the last couple of months. I think 130, 140 all the way to about 162. Difficult always to figure out what's happening with Fortis Healthcare. Is that a move? All right. Siddharth, any thoughts on Fortis?
No, we still believe that this stock still looks little high on valuations. It looks expensive compared to its peers. So we don't want to go for a fresh buying for this company. Neither we have a recommendation on the same. We still believe there can be a good turnaround story for 2018 in pharma space. Of course, one has to select, pick and choose. But one of the company which we still have a positive belief on is Kapadia Healthcare, because it's most immune in terms of US FDA observations are concerned, and financials have been stacked up very well. They are getting a lot of approvals. Kapadia Healthcare in the pharma space, which looks very promising, with a target of around 530.
So there are 2 or 3 mid-cap names that have been moving up with good volumes in last few minutes. Navkar Corporation has gained another 3%, is up close to 7.5 now. You also have a Navbharat Venture moving up further, but you also have Nesco, which is up by around 2%, total 6% for today. And Rane Holding has gained another 3% in last few minutes. Any of these names on your radar or under your coverage?
Well, Navkar Corp looks, we have a hold rating on this Navkar Corp. We believe that there is a good operational efficiency which is coming in for the company. This can be a company, fresh buying I would not recommend at the current price, but if somebody is holding it, there is a good potential further for this company to achieve good targets. I would say keep holding it for another 3 to 6 months. I think good performance will flow in.
Okay. 3:15, that time of the show, wherein we tell you what is it that dealing rooms are recommending in the session today. Darshan and Yatin join in with their channel checks. Good afternoon to both of you. Darshan, let's start off with you. What are you gathering from your sources?
Yeah, so Mindtree is something that is being spoken about today. It's flat in trade, but some of the domestic funds are accumulating. The general sense that they're getting is that this time around, the mid-cap IT will come out with a better set of numbers than the large-cap IT. So Mindtree is one of the counters that's been spoken about. Fortis is up 5%. There is a likely buzz of a possible fund infusion that could come in. Earlier there were talks of M&A deal happening, but that's all died down. The latest that we've heard from some of the dealing room is a potential fund infusion that could come in. So Fortis has been spoken about. And the last stock that dealers are talking about is BEML. Now, the news that came out on Bloomberg Terminal was the fact that the government has delayed the divestment of BEML and the counter has corrected significantly, but there could be more downside on the counter as per some of the dealing rooms I spoke to, because the entire move that had happened on BEML was on account of this news of divestment that was happening. So that is delayed. So probably more downside or a range bound trade is something that they expect. So the upside, they believe, is pretty much limited at this point of time. Nathan, what are you hearing?
Yeah. So basically, Capital First, that is one stock, hasn't moved much like the other NBFCs, but at this point in time, based on domestic fund flows, dealers are indicating that there could be some trading upside in the stock. Apart from that, watch out for the mid-cap IT twins, which is Hexaware and KPIT. Both of these stocks are showing good traction in the future and option segment. And dealers do indicate that there is a lot of FI traction as far as mid-cap IT is concerned. So both Hexaware and KPIT have been surprisingly strong versus the other large-cap IT peers. And finally, in the cash segment, watch out for ISMO. That is also one stock wherein HNI accumulation is seen at current levels.
Thanks for that, Yatin and Darshan. Well, I was just going to go to KPIT Technologies. If you could just pull up the intraday chart of that, the gains that you're seeing on KPIT, I guess, have just come in. It's at day's high now, and in the last half an hour, this counter is having a good week. In fact, all 3 trading sessions this week, it's been trading, it's been giving good returns. In fact, it's touched its fresh 52-week high in today's session.
It's the highest voted stock on the channel, I would say.
Really?
You know, right from Jayesh, who picked up this stock on Monday morning, when the terminal threw up an indicator on the buy side, several analysts have recommended this stock. So this,
you know what, it's approaching its all-time high, which was seen in 2015, March of 2015, around 224 or 225. So currently, it's approaching the 200 mark. Let's see if that gets broken out. I'm sure. Let's take a call from the technical analysts. They'll be better placed to give us newer targets on it. And Hemen, I'd like to come to you since you've been tracking Mindtree also pretty closely. What sort of levels are you watching out on Mindtree and KPIT Tech?
In terms of KPIT, Navneet, like you mentioned, we posted a fresh 2-year high. The all-time high comes in around 233. The earlier level was 196, which we are taking out today. So I guess this opens the doors for an upside to 225 or 235, Navneet. In terms of Mindtree, we've had a very decent longer-term turnaround in place. We've had a consolidation, a decline, decline of consolidation. The breakout came in at around 560. Currently, it's slightly overbought, so maybe we could be in a spot of volatility. Daily MACD is giving a sell. So I'd say we're on the cusp of a correction as far as Mindtree is concerned from a shorter term point of view. If you take a slightly longer term point of view, we are heading towards 620 and then 660 now. But currently, we're just heading into small correction.
Okay, so that's the call coming in on these stocks. Let's look at some more names. Phillips Carbon is now up 17%. Oriental Carbon, well, I haven't really come across this stock very frequently, but the stock is also gaining around 5%. Gufic Biosciences is another stock which has gained 3% in last few minutes. So these are some of the last-minute gainers in today's trade.
You know, there are a lot of stocks which are locked in upper circuit. So the sell-off that you saw in last 1 hour of trade was only for the large caps because the advance decline ratio is still healthy and it's still in favor of the advances on National Stock Exchange. Look at stocks like ESAB India. That's locked with gains of 20% upper circuit there. Tasty Bites, which has been pretty active since the morning session, that too is locked in upper circuit with gains of 20%. Ambika Cotton also has seen gains of 20%. TT Limited 20% gains. Nagarjuna Fertilizer, Vikas Ecotech. So there are a whole host of stocks in the broader markets which are seeing very strong gains coming about. Siddharth, anything that you track from the stocks I just highlighted?
Siddharth, are you able to hear us? No, it doesn't look like. So probably we've lost him. But Neel Kamal is yet another interesting stock. It has gained 3.5–4% in last few minutes, up 6.5% for the day, quoting at day's high. Hemen, if you look at the chart, do you think one should enter Neel Kamal now?
We have moved a bit, Pradeep. I think the stock technically looks pretty sound. Further upside is a cinch, but I'm not sure if the risk-reward ratio is in favor of a long trade now. If you were to give me an option, I'd say buy LNT or United Breweries. Both look fantastic. The stop losses are closer, the breakouts are coming now, so I'd go for those.
Hadrien, what about you? Your top trading strategies?
Yeah, I'll go with Gujarat Gas. Actually, the stock is showing good traction in today's trade with good volumes as well. So I think Gujarat Gas would be a good trade for a day or two and can play for an upside target of close to 885, 890.
And Hemen, any STBT or BTST from your side?
In terms of an STBT, I'd say G1 seems like a BTST, Pradeep.
Okay, just want to, sorry Pradeep, just want to pull up United Breweries. That counter has seen gains in just last 5 to 10 minutes of trade. Remember, it's also in the futures and options market, 6% higher, up almost 6% there. So good gains there for United Breweries. The other one is Wockhardt Pharma. If you could just pull up that stock as well. The intraday chart will just give us a clear trend as to when exactly. Yeah, that's also a day's high. Wockhardt Pharma almost up closer to 4%. Hadrien, anything on Wockhardt on the charts?
Oh yeah, Wockhardt is really looking impressive. In fact, if you do a smaller time frame analysis, it is actually breaking out from this declining channel, which it was set in the past 2 days. So I think that barriers have been broken today, and the relative strength is also continuing to indicate that this current move will extend in the next day or two. So Wockhardt definitely should be a short-term traders buy at these levels.
Okay.
Let me just take a view on United Breweries since I highlighted that, and sorry for that buy stamp, but let me reconfirm. Let me just go across to the technical analyst and check whether they are willing to give a buy call on this or not. That was just a glitch from our side, that buy stamp. Hemen, I'll just come to you. United Breweries on the charts at these levels, 6% higher. Would you take a bet?
Another 6% in the next 20 trading sessions, no need. Buy.
Okay, so the buy stamp came from Hemen, I guess. Well, let's move on. Siddharth is back with us, I guess, now. Siddharth, some of the stocks we have been discussing, if you have a view on Neel Kamal, if you have a view on Nesco, maybe?
Well, Neel Kamal, we are positive on. We have a buy recommendation with a target of around 2300. We believe consumption can be a good play for another 3 to 6 months. It's just because of overall their capacity in the furniture business. They've been building up, margins have been improving. Overall, many of us must be having a thought of that input prices, raw material prices, but higher crude oil prices are not affecting them that big time. So in that fashion also, it is very much immune. Neel Kamal in the consumption play, very interesting. For another 3 to 6 months, we believe there is a good upside potential for the company. One can keep buying the stock on every dips at the current levels also, with a target of around 2300.
Siddharth, you also said you like Philip Carbon at the start of the show. What would your target price be here? Because the counter is now up almost 18%. It's crossed the 1200 mark in today's session.
Well, it has surpassed our target and we believe further re-rating is anticipated, but currently it has surpassed our target. Stock today is on a crazy move, but overall fundamentals are really stacked up very well for the entire sector, whether it is Philips Carbon Black or Graphite or HEG for that matter. Rain Industry is also included in the same pack. Overall fundamentals are changing, so of course there is a good expectation of target re-rating.
So we talked about chemical stocks, we talked about fertilizer, but two stocks that I would like to highlight here, Tata Chemicals and Himadri Speciality, because both these stocks have traded 4 to 5 times their average volume in today's trade. Hadrien, if you have looked at both these charts, Tata Chemical and Himadri Speciality, do you think there is a trade here?
Yeah, both Tata Chemicals and Himadri Speciality have actually broken out in today's. In fact, Tata Chemicals broke out yesterday itself. So, in the short term, both these stocks are looking good at these levels. And Himadri Speciality, in fact, can also rally towards the 185, 190 mark in the short term.
Okay, pull up Ujjivan Financial and also Kajaria Ceramics. Both the stocks have seen gains between 3 to 4%. Ujjivan Financial is now almost trading at day's high. Kajaria Ceramics also at day's high. Both the stocks are also in the futures and options space. Hemen, anything that you like, Ujjivan or Kajaria Ceramics at these levels?
I just recommended Ujjivan as a BTST Navneet with Pradeep, and Kajaria is closing. It needs a close about 740, 42 Navneet. I think if that happens, we are in this 12 to 13 trading week sideways movement. So I mean, we are Wednesday. I would prefer this would happen on a Friday. But if that happens, we are setting the stage for another 5 to 7% upside about the 742 cash market level, Navneet, as far as this ceramic is concerned. I mean Kajaria, sir.
Okay. One stock that Darshan also mentioned, BEML, is down around 3.5%. Siddharth, if this stock is on your radar, suppose this market buzz is true that probably divestment process is on back burner for now. What could happen to this stock? I mean, minus a divestment process, how is it fundamentally positioned right now?
Well, Pradeep, we don't have a coverage, but fundamentally BEML is placed very well. In fact, the last quarter which they had posted, that was a turnaround quarter. They had posted a profit in front of a loss. So overall business and the kind of metro constructions all across we have been seeing in most of the tier 2, tier 3 cities in our country, BEML has been placed very well, and we believe that it is a good fundamentals. Divestment can be an overhang for the company going forward.
Okay, so that's the call on BEML. Well, we are just 3 minutes away from the close, so let's wrap the market. 10,443, barely positive, negative. It's very difficult to guess whether markets are going to close in positive territory. Navneet, how do you see it?
That's right. But let's look at the positive picture. The broader markets today did pretty well, but the benchmarks gave up all their gains that one saw at the opening levels. They were able to sustain the gains, but I think in the last hour of trade, once again, some sell-off came about. So Nifty down almost 50 to 55 points from its day's high, closing flattish. Sensex also flat closing, though currently it's showing you the cuts of between 19 to 20 points. Bank Nifty once again turned weak in the second half of the session. It's also closing below its 50-day moving average, which may not be a great sign if you look at technically. So 27 points cut for Bank Nifty. Let's just pull up the broader markets and see how they fared today. Well, clearly the day belonged to them. The Nifty small cap index up almost 1.3%. The Nifty mid cap free float index was up in about 7/10% of gain there. BSE small cap index was up almost 1%, and clearly that was being reflected in the advance decline ratio, which was pretty much in favor of the advances. But let's just look at Sensex constituents and see which were the stocks which led to the movement we saw. Let me start off with the gainers. Adani Port was up and about. In fact, Adani Group stocks were today pretty active. Even Adani Enterprises saw a good amount of gains. L&T, the heavyweight recommended by CLSA for 2018, and also in that list ICICI Bank featured. So both those stocks were up and about. Yes Bank, Coal India, Bharti, Tata Motors, DVR were a couple of other stocks which fared well. But on the losing side, Dr. Reddy's Laboratories was your top loser, down 3%. Wipro didn't do that well. That too was down almost 2.8%. And you had stocks like ONGC, Bajaj Auto. Profit booking continues for Maruti, and Tata Motors, which was actually active yesterday, came under pressure. And your heavyweights, Infosys, HDFC Bank, I guess are the one, and also State Bank of India, which dragged the index lower, Pradeep.
So if you look at the broader market picture, is more or less the same, positive market breadth overall. So I have more gainers and losers. Philips Carbon is one that we have been focusing, and Siddharth recommended the stock in this show today. Itself, the stock has moved up by around 7-8% since then. Navkar Corporation is another stock which has been doing well. In fact, logistics has been finding some takers, and Navkar is the next one to join in pre-call. Another good day of trade for this ancillary player. Power Mech, we did speak to the management in today's show, and there was a positive guidance coming in. Also, Sagar Cement is moving up with local mutual funds interested at this counter, and Graphite India moved up in today's trade as well. So strong trade continues in this stock. In fact, it was locked at the upper circuit in last hour of trade today. A few losers. Arcom, second day of profit booking. BEML came off during the afternoon session, and its closing is also to close near the day's low on the buzz that probably divestment process is going slow or is on back burner for now. Bajaj Hindustan was also a key loser. It moved up yesterday on the news of company getting a clearance on S4A from the lenders. Today also it opened higher, but then gave up all its gain, in fact closing down in last minute finally. So these are some of the key mid-cap names in today's trade.
Clearly, investors are now looking at broader markets to find some value, and precisely that's the reason in past few days the broader markets have been outperforming rather the benchmark. So this is the Nifty contribution chart. These are the stocks which contributed the most. So L&T, ICICI Bank, they contributed nearly 16 points. Reliance Industries was active today, and even Vedanta from the metals pack contributed. What capped the moves on the upside were your heavyweights. HDFC Bank, which has almost 10% weightage on Nifty, dragged it lower by 10 points. Maruti Suzuki, Infosys, Wipro were a couple of other stocks. So IT was looking pretty weak in today's session, and obviously we've been telling you some profit booking has come in for Maruti after stellar gains that one saw for this counter in 2017. Let's also look at how the advance decline ratio fared then. Favor of the advances, clearly this is 2:1. This is how it panned out throughout the session. So the sell-off that you saw in the last hour of trade was largely because of this profit booking that is being seen for the large cap stocks, and that has been a concern. We've all been talking about how the valuations now appear on the higher side. In terms of participation, well, let's see how the turnover panned out. The NSE F&O turnover is just about above the average. Usually we get to see average turnover of 5.5 lakh crore. The NSE cash was pretty much on the higher side, almost 33. BSE cash turnover was almost closer to 5,000 crores. In terms of participation, average turnover is what I would like to call it. And the volatility, that's been a concern, remember, for the last 3 sessions. Today, India VIX actually opened down 2.5 to 3%, but it is closed off day's low, so closed above the mark of 13.5. So keep an eye on volatility, which has been a concern. Which was the top sectoral gainer today? That was the metals index. Remember, a lot of brokerages are turning bullish. The Nifty metals index outperformed with gains of 1.5%. And in that, your top gainer was Jindal Steel and Power, which IDFC likes apparently, and that stock too touched its 52-week high with gains of almost 8%. Just 3 more stocks I want to highlight which touched their fresh 52-week high, and these are KPIT Technologies, Jet Airways, and Adani Enterprises. All these 3 counters touched their fresh 52-week high, and the gains were seen in that range of almost 4 to 8%. Well, on that note, let's get you some closing thoughts from our experts. Hemen, I'll come to you. How would you approach the trade tomorrow on Nifty or Bank Nifty, or you would just stay away from these indices because they are now, it's looking like they're consolidating at current levels?
Absolutely, Navneet. I have a feeling one needs to stay away from the indices. They're consolidating. But I have a feeling that if there is a further fall, one would need to look at the data. But I think 1.5 lakh open interest had been added in the Bank Nifty in the last 2 days. One will have to see the data today. So if this drags on for a couple of days more and there's more open interest added in the Bank Nifty, I would take that as a positive. And it would also mean that the underperformance of the Bank Nifty is coming to an end. But this would probably take a few days. So I think script specific, markets on fire, and I would stay away from the indices for the time.
In fact, after moving in a range of 75 points, Nifty has closed almost flat where it was 10,443. That's the closing level. So stay away from the index. But Hadrien, which segments would you focus on in tomorrow's trade?
Yeah, I'd rather stick to the stocks that are outside the index. And in fact, NB Ventures is looking pretty impressive after today's move. On the weekly charts as well, this very strong breakout has come already, and I think it is also convincingly sustaining above it. So I'd go with an NB Ventures, not a BTHC kind of a trade, but a short-term kind of a trade because projections are indicating targets of 175 to 180 is on the cards. So short-term traders can go for an NB Ventures from here on.
Okay, Siddharth, closing thoughts from you?
Well, markets, we are looking for pre-budget rally before the budget. Of course, it is in well shape. Stock specific one has to approach, and I think wherever the results, our expectations are strong, I think those stocks will be on the move before the result season opens. So be stock specific. And one stock which I would like to put across, as we have discussed about Phillips Carbon and graphite as a cyclical play, one more stock cyclical which is there in our radar and our buy recommendation is MOIL. MOIL India looks very interesting from here on. 335 is our target. We believe they have increased their ore prices also. They're one of the product EMD, they have increased their prices by 7.5%. Capacities are going to double in next 2 years. Mall India in the cyclical play looks very interesting from here on with a target of 335.
All right, gentlemen, thanks a lot for joining us today and taking us through your thoughts on the markets. Hemen, Hadrien, Siddharth, all three of you, thanks a lot for joining us today. Well, on that note, it's a wrap on this edition of Countdown. Thanks very much for watching the show, but don't go anywhere. On the other side, Mutual Fund Show comes up next.